Hello and welcome to Market News.
When we talk about earnings, you had Infosys come up with their numbers on Friday itself. What's your sense when we talk about the IT space on the whole itself from here? Looking at the way Infy numbers panned out, is there more headroom? Because we did see the stocks on a positive reaction there, almost 4 to 5% gains coming in for Infy on Friday itself. How much more headroom, and would you advise investors to look at this space?
In my experience in Asia, actually, when there is a strategy that starts working and when there are strong fundamentals behind, those strategies can actually carry on a lot longer than what the market thinks. And we simply continuously upgrade our numbers on that sector. So although the valuation in the IT sector, in the healthcare sector may look relatively high, we're still actually optimistic and positive on these sectors, and we maintain an overweight. Two more things to say on that is that the currency impact is not going to probably show into the second quarter results, but the negative impact is going to be felt a lot more into the third and fourth quarter. For instance, for the FMCG companies, this is at a time where they're going to be forced to buy new input with a lot weaker currency, that they're going to see actually some margin deterioration. At the same time, that positive effect of a weak currency for Infosys, for the likes of TCS, for Tata Motors, is going to be felt over the next 2 quarters. So there is room for further upside surprise for the sector. The last key issue we're having with India right now, it's the funding cost. Because the banks are going to see an increase in NPLs. We're going to see actually the credit costs rising. And so you're going to have to differentiate very much between the cash-rich companies, which mostly are the exporter names. And you're going to have to be probably a lot more cautious with some domestic names, and especially with the capital goods and industrial names.
Hello and welcome to Market News.